All right, we are live for a Friday edition of the Mike and Mario Show. Excited to be back. Looking forward to connecting. Mario, how you doing, my friend?
Yeah, Mike, I'm doing well, and you?
I'm excellent. I'm excellent. Excited to connect with you as always, and try to just walk our way through and talk our way through this craziness. And as of right now, as we went, as we mentioned before, it looks like a whisperer came out and calmed things down and put a little bit of confidence in the markets as we're looking at everything for most part trending upward. But we know it's temporary and it's not authentic in nature. But yeah. So what do you want to start today? How you want to start off talking about the whisperer or what?
Sure. Yeah. So who's the whisperer? Well, it's a guy called Nick Timiraos. He writes for the Wall Street Journal, and the Federal Reserve has had these kinds of reporters who they like leak stuff to. If they see that the market is not behaving properly, they'll come out and tell him to write something.
Mm-hmm.
And this guy came out today. He did say that the Fed's going to raise rates by 75 basis points,
Yeah.
which was expected. But he said people are starting. The Fed's starting to debate and to talk about whether they should even stop raising rates next year,
Right.
and that put a rocket up all asset classes,
Mm-hmm.
and it also triggered quite a big sell-off in the dollar versus the yen.
Mm-hmm.
So like right now, the dollar is down over 2%, which is huge in the FX market. The dollar reached a high of almost 152. We're now at 146.80. And
Yeah.
why is that? Well, because the Japan has been the only country that has dragged its foot. It has kept doing QE and yield curve control, while the rest of the world has been raising rates and doing QT. So the fact that the Fed might be shifting just slightly,
Mm-hmm.
that's how it affects these markets. And earlier today as well, morning time London, I follow the markets, of course.
Yeah.
Treasury yields, the 10-year yield reached 433.
Mm-hmm.
And I think the Fed was concerned about that. And that's why they wheeled out this Wall Street Journal whisperer.
Yeah, and I was looking at a couple of different tweets throughout the week, and let me see if I can find it real quick. Just because I think it was maybe 48 hours ago, I saw something from Fed Evans saying that the Federal Reserve, as of right now, is going to continue to press forward or something like that. So each and every individual, each different Fed member, FOMC members, they all come out with their own different narratives, and just the fact that this Fed whisperer guy I guess has been privy to some information in reference to them debating. Like I don't believe it. I think it's a bunch of hogwash. And it so happens that we have midterms, almost 2.5 weeks away. And then of course I sent you the article about Janet Yellen saying that she's going to start hitting the road, promoting Biden's economic agenda and how well the economy is doing and all this stuff I hear. I think this is just a strategic event to basically end this week in the green on the most part to kind of give people a sense of comfort heading into the weekend because next week is going to be a whole nother case of issues, I'm sure. So, can you believe this stuff? I don't think you can. It's entertaining to see, but once again, they're debating, right? What are they debating? Like if they're still going to be fighting inflation, they're well beneath what it takes to actually bring it to a halt. And so they're talking about pausing or slowing down and heading to December. Like, okay, yeah,
Yeah, that's what they said. I mean, that they might even do less than 75 in December. They have a meeting on the first and second, and it could be just about managing the market as well, not
right,
because treasuries are very important, treasury yields, and they're continue to rise not just in the U.S. but even the U.K.
mm-hmm.
where we have political mayhem, and even in Germany and Italy and France. So this is not localized. This is a symptom that we've got too much debt,
Mm-hmm.
we've got too much inflation, and our central banks can't really fight it properly,
Right,
even though the Fed's trying to, but I don't think they can really squash inflation for the long term.
right.
And yeah, but the politics might help too. We're
Right.
hearing these people seem to be living in a different world. Janet Yellen saying that the economy is doing great, even though we've had two consecutive quarters of negative GDP growth. But not surprising.
Right. Now, it is so, and as we were talking beforehand about, how ultimately debt rules the world. The world revolves around debt, and right now we're witnessing contagion in the debt market. And of course, we got a lot of different commentators out here. Is there such thing as overhyping the severity of the debt issue, given the fact that the amount at which rates are raising, so ultimately signifying an ultimate sell-off? And we know the UK situation; everybody's trying to find some liquidity. And also, let me just jump into that article from last week about as soon as we finished up, Janet Yellen came out talking about trying to, starting a bond buyback program to provide some liquidity. Like, is this a sign of desperation that they're trying to keep things at a relative calm, buying them more time, or what are you thinking?
Well, it makes no sense because the Treasury um, has to issue or sell bonds to
Mm-hmm.
keep running, and to believe that the Treasury can buy back bonds
Mm-hmm.
to calm things down. It just goes to show that Janet Yellen is an academic and doesn't know much about markets.
Yeah.
It's like you having a credit card debt and saying that you're gonna pay it off, but at the same time, it's gonna grow. It makes no sense, and the liquidity problem is more to do with the fact that there's too much debt,
Mm-hmm.
and the higher yields keep going, the more of a problem it's going to become
Mm-hmm.
for the treasury, and also for consumers and corporations, because they're going to have to find more and more money to service the debt.
Mm-hmm.
And the way the treasury does that is by issuing even more debt, because they never run a surplus. So I think that's not going to work either.
Now, with the current trajectory of the 10-year, and of course, everything is basically dependent upon that in a sense in the debt market. Are you surprised at all at the rate at which has gone up? And I think you mentioned beforehand, said 5 could be that breaking point, or it could be the point where they have to step in, or we've gone well beyond what I think we
Mhm.
talked about 4 being a
Yeah,
pivoting moment as well. Because
yeah.
this initial whisperer be signaling something in reference to this whole debt situation, or what?
Yeah, I'm kind of surprised, but I'm not, about how yields have risen so sharply this year.
Mm-hmm.
I've always expected, even in the last 10, 12 years,
Mm-hmm.
because something like this to happen, because you can't keep issuing debt and indebting yourself and expect borrowers to, like, not want more for lending to you, but uh, they were able to keep this charade going for quite a long time, and
Yeah.
yields really low. Uh, but I've always expected this to happen, and I think, of course, it's happening now, because we started the year, the 10-year yield was at 1.5,
Mm-hmm.
and we got, I guess, virtually very close to 4.5 today. Uh, it's very quick. It's very
Yeah.
quick, and I think the quicker it goes, and also if we go up and then come down and then
Mm-hmm.
go up again, or volatility,
Yeah.
that doesn't help either, because I've spoken about this on my channel, that treasuries are used as collateral for speculation, for pension funds,
Mm-hmm.
and if that collateral is not stable, the whole system becomes unstable.
Yeah. Speaking of which, let's acknowledge this from Keenan. Appreciate you, my friend. It says the Fed has to raise rates on the SPR. Is drained, and we see true market prices on fuel. Mario, did you watch Jack's video on the bond yield inversion?
Who's Jack?
I'm not quite sure. Keenan, feel free to highlight a little bit more in reference
Yeah,
to the video you're talking
Strategic
about.
Petroleum Reserves. Yeah, uh, they announced recently, I think a couple of days ago, that they're planning to replenish it between $67 and $72, which is, uh, I think, a silly thing to tell the
Right.
market where you're going to be buying.
Right.
Bec-
Especially when OPEC Plus and Russia, they're basically telling you that
yeah,
they're not going to go for it.
uh,
They're not going for that.
Jack Gamble, maybe he's talking about nobody splash of finance. While the yield curve has been inverted for quite a while, and usually
Mhm.
that's a signal of a recession. But I think we're already in a recession, not just in the U.S. but in the UK,
Mhm.
and it's going to come very very quickly to the EU. The reason I say the US is in a recession is because you had negative GDP growth in the first and second quarter, and that's a definition of recession, even though economists on Wall Street and politicians don't seem to believe it.
Yeah, and all the other indicators we have here, of course, mortgage rates. I think it's at almost damn near 20-year high or something crazy. We're seeing that the auto loans is
Yeah.
heading down, and
The other thing about the bond market and treasury yields going up rapidly, that will make mortgage and corporate yields go up even more quicker.
Mhm.
You see, and that's not good.
Yeah. Here's a couple questions here. It says, in Europe, who do you think is going to give up first and go to Russia or the OPEC and kiss butt for more fuel to keep warm this winter?
I would
It-
venture to say maybe Italy.
you think so, Italy?
Maybe I don't know. I mean,
Yeah.
I don't think the Germans are going to do it because Olaf Scholz the other day said, "Oh, we're now not dependent on Russia for gas anymore." But I guess Germany is dependent on the U.S. for gas now, liquefied LNG.
Yeah.
Even though we have suspicions of who blew up his pipelines.
But they're not telling us.
No, they're not
But they're not
telling
gonna
us
tell
because
us.
it's probably not the Russians, right? Because it's
Oh, definitely. It's
and
definitely.
that's so you're gonna be dependent on someone probably who like blew up your pipelines for your gas. That doesn't seem like a good deal to me.
Not at
And
all.
I saw someone in the beginning of the live stream said, "Oh, is Mario gonna criticize the West again?" I've got nothing. I think the West has been a great culture, but unfortunately, what's happening in the West now is like sad
Mhm.
to see. And it doesn't mean to say that I think China or Russia or those cultures are good and
Mhm.
that we should emulate them. All I'm trying to say is that they're trying to move away from our financial architecture,
Mhm.
and that's going to lower demand for our currencies. That's all I'm trying to say.
Yeah.
But I still think their leaders are more competent. It doesn't mean to say I like the Chinese credit score system, or that I even like the way things work in Russia. Even though I don't know much about Russia, uh,
Yeah.
I only know what we're told. Really, and sometimes I wonder.
Right. I question everything just because at this current moment with the amount of technology and how, deep fakes and all this stuff, you really don't know what to believe just because I'm seeing more and more footage about the whole, because every politician used the whole Russia-Ukraine event as the primary excuse for the energy crisis and everything like that. But we had those issues well before that
Yeah,
stuff jumped off. So you can't believe those guys. And on top of the health agenda that they're still trying to push around the world. So there's a much more sinister plan at play here. I saw some questions. Let me see here. There's
who
some.
is Fetterman? I mean, I saw like a meme about Fetterman. You probably know. Someone's asking there.
Fetterman. Let
Fetterman
me
question mark. Edward
question.
Diaz. You Fetterman. I don't know who that is.
FET. I don't know. That's. Let me. I'm trying to find that. I don't
Yeah.
see. Not sure. Feel free to elaborate more so that we'll understand
Yeah.
what's going on here. Here's one questions. No, Russia, OPEC. No. So we getting some questions. So I'm not sure. So it says Bill Holter thinks we have weeks left until the stuff house comes down. What do you both think? I did see that video, and one of the things I heard from him was just the systemic risk at play right now. And
Mm.
of course, he focused on the banking sector and all the things that we're not really told about the issues in the banking sector and how we're one credit crisis away from entire resource infrastructure breaking down. And of course, all the inability of, being able to go to stores and get what you need and all stuff like that, which, Bill Holder's been saying that for quite some time. And at some point he's going to be right. But as
Yeah.
far as this time frame, everybody's saying weeks away. I'm like,
Yeah. Well, I think it was around August, July, August. I was seeing problems in the bond market, especially in the UK.
Mhm.
And I did say usually currency crises start like in the autumn or fall equinox. And I thought we could have a sovereign debt crisis, and we did in the
Right.
UK. And I think it's spilling over into all the other major countries like the US, the
Mhm.
EU, Germany, and they're going to try to fight it as much as possible. Like with this whisper coming out today, that was all part of it to try to
Mhm.
keep yields from rising too sharply. And I think, yeah, Bill Holter talked about, maybe I didn't watch it, but you said he talked about the banks.
Mhm.
But the banks, they're completely dependent on having a stable government bond market.
Mhm.
So I think the whole, how can I say, uh, the whole crisis is going to be a sovereign debt crisis,
Mhm.
and that's gonna. We saw here in the UK that the private pension system was within the defined benefit private pension system was within minutes or hours of completely evaporating
Mhm.
because of the gilt market, because yields went up too sharply and too quickly.
Yeah. So here is that Fetterman. Let me find the Fetterman guy here. One second. I had him up here. So here's that Fetterman guy, and I've seen videos. I didn't listen to him, but I'm not quite sure. I don't follow
Yeah,
him, so I don't know what
I
they're
have
talking
no
about.
idea who the oh, he's lieutenant governor of Pennsylvania.
Yeah, so I'm not quite sure who he is, but so feel free in the chat to highlight, I guess, his stance and position. I know he's been very outspoken, and he doesn't appear to be a typical politician when he speaks, is when I gather. So, but I'm not sure of who he is. And then also, what else we got here? Okay, let's get to so feel free to throw out some questions or whatnot, but we'll keep it moving. I got a couple more topics here that I wanted to touch on. Let me grab them real quick. So here is something as well, just to I'm not sure how to take it. This is probably more of a long-term issue to be dealt with, but there's more states piling on as far as divesting in Blackrock due to that, as it says here, the woke political agenda. And so they're pulling funds from the whole out of the whole ESG movement that BlackRock, Larry Fink is pushing. Do you see this as something that will actually catch on and it'll basically force BlackRock to pivot and move away from that, woke energy policy they come up with, or this is just some noise or distractions in the short term? What are you thinking?
No, I think it's a bigger move, and hopefully, this ESG agenda will be like totally forgotten in a few years' time.
Mm-hmm.
And I noticed that Texas and Louisiana have done the same.
Right.
And I even noticed that Jamie Dimon, I think a few like last week or something, he was not talking publicly to reporters, but he was like at a private conference, and
Mm-hmm.
he even had a go at ESG, which I thought was good. And he even said, Jamie Dimon, who's the CEO of JP Morgan, that the US has plenty of hydrocarbons or oil, and that we shouldn't go begging the Saudis and Venezuela for oil.
Right.
So yeah, I think this ESG thing is dead in the water.
Mm-hmm.
Yeah, they're still pushing it. I mean, when I was on holiday, I watched a little bit of Bloomberg and CNBC in the hotel, and all the adverts are like about climate and the green stuff,
Yeah.
electricity, and it's still, I'm not, it's still there, but hopefully, uh, if enough states say no to it and BlackRock loses a lot of like funds that
Mm-hmm.
they manage, because I think um, what state was that? Missouri. They
Missouri,
withdrew
yeah.
500 million.
500 million.
So, maybe maybe California won't do that, CalPERS or something, because they're so woke. But if you get more and more states doing it, I think BlackRock will have to think again. And I think even uh, the CEO of BlackRock a few months ago said something about ESG, that we need to slow down.
Yeah, and speaking of which, BlackRock, here is something I just pulled up here because somebody asked a question about could BlackRock. It says, could a BlackRock meltdown cause a crisis? And Definitely, it could. So here's this article from last week. It says BlackRock assets tumble 60% as stock and bond markets slide. So, BlackRock, they're interconnected with this whole debt Ponzi scheme nature as well, and they happen to have a very large asset holding. Not quite sure what it is, but they would
Yeah,
definitely be caught in the crossfires. Now, would they be? Because they're not actually a banking institution; they're more of a
yeah,
hedge
they're
fund, money
yeah.
management.
I mean, and a lot of the money they manage are investors' money.
Hmm.
The thing is that they have a lot of it. I think
Right,
it's like 10 trillion. So if the stock and bond market are doing badly, of course they're going to do badly. But it doesn't mean to say that they, as a company, are going to do badly. It's just their clients. It's like a lot of normal people buy maybe a BlackRock emerging market fund. That's
right.
how. But they control so many assets now that they can leverage that, and that's
So,
how they become quite powerful.
so as of 2020, it says the firm oversaw 7.96 trillion, and so they
Yeah,
are definitely a extremely big institution now. So I could literally see the government literally having or trying to attempt to do something different or special for them, because I'd imagine a lot of their politicians and a lot of the uber wealthy individuals are in that company there. So
oh yeah,
we see some bailout type, bail in type
and
situation. How
I
would they be
think
treated?
they get a lot of lobbying from BlackRock
Hmm.
uh,
Yeah,
in
Larry Fink
Washington
had a lot of
D.C.
visits to the White House. Even
Yeah,
under the old administration and under this current one. So he's
and they're
solid.
also heavily involved with the Federal Reserve. Like in 2020,
Mhm.
they told the Fed what to do the QE and go directly to outside the banking system with the QE, which
Mhm.
is increased the money supply massively and has led to rising prices.
Right.
Which people call inflation, but the inflation was caused, of course, by it's the strategy of going direct, which is written by BlackRock.
Mhm.
And I recommend people watch Best Evidence YouTube channel.
Mhm.
John Titus, he talks about that because a lot of people, and even in the alternative, they said, "Oh, QE is not going to cause it's deflationary. It's not going to cause rising prices," but it did. And BlackRock was a big part of that because they advised the Fed how to do that.
Right. They've benefited heavily over the last 2 years, especially in the real estate game, going out and buying up neighborhoods and new communities, you name it. Here is a question. It says, Mario, can you elaborate on why the blame for UK's recent problems were blamed on trusts?
Well, because most people don't really know the reason for why we are in this situation. I
Hmm.
mean, we could go back to World War I when the UK was taken off the gold standard and try to go back in the 20s and failed. But I think it's because of that. People don't realize that it's got to do with the '08 crisis because we had to bail out not just the banks, but homeowners in the UK, keep
Yeah.
their mortgages whole and keep the banks whole. And that was more and more debt, deficit spending.
Hmm.
And the Tories promised in 2010 that by 2015 we wouldn't have a budget deficit anymore, but they never performed that. And we still have a deficit. So,
Right.
yes, maybe that mini budget could have been better brought out. They could have said, yes, we're going to cut taxes, but we're also going to cut the size of government.
Mm.
But I think if it hadn't been Truss and her mini budget, it would have been something else
Hmm.
because we just have too much debt, too much inflation, and we don't have the major reserve currency, so we can't. We're not as powerful as the
Can't,
Fed and the
can't
U.S.
print your way out of it.
Treasury. Yeah, and our currency got hurt, and the currency was going down even before that. So it's very easy to blame that mini budget, but
Hmm.
it takes away from the fact that Rishi Sunak, who was the chancellor
Hmm.
in 2020, 2021, and even this year, he spent like £500 billion
Hmm.
keeping people at home locked up for 240 days without doing anything. That was what broke the camel's back, not
Yeah.
Liz Truss 45 billion mini budget.
Yeah.
It wasn't that big,
I
but it
think
didn't help.
in hindsight, looking back, that mini budget was just the initial domino that started the cascading of events. which exposed the whole debt Ponzi
Yeah.
scheme
Yeah.
system
Yeah.
dealing with the UK, like a former great powerhouse, world reserve currency type nation 100 plus years ago, now is just on the cusp of basically just staying afloat any way they can. And that's why the political chaos is going to ensue. Like nobody's going to come in
Oh
there and
yeah.
say, hey, it's just not possible. So,
No, I mean, and what happened to trust tells us is that anyone who trusts come in and change things to fix things, they're going to be out in 44, at least for, in a few weeks.
yeah,
So change will only come, unfortunately, after everything implodes.
correct. Now, speaking of change, here's just a little headline: Boris Johnson and Rishi Sunak touted as UK's next prime minister. So my thought is that there's no term limits or no nothing. Boris can literally just resign and then come right back. Like on some like that. Is that? I'm assuming it's lawful because they're trying to push
Yeah.
it. Is this UK's best? Is this the best you guys have to offer?
Well, the argument here is that the last general election was 2019, and it was Boris Johnson who led the victory and the 70-seat majority. So he's the only guy that can come back. But I think it's totally ridiculous because he was discredited completely because of what he did during lockdown, while he was telling people to stay at home and not see family members. He was having parties at Downing Street, and really bad. I think he doesn't have any moral authority to be a prime minister, but the Tory party is pushing it hard because they know if they don't, we'd have to have general elections called, and they would lose completely. And we'd have a Labour government, which I'm not sure is any better.
Yeah, just more confusion. All right, let's get to some questions. Feel free to throw out some thoughts, ideas, suggestions, and we can just jump on that. Here's one. Let me see. I see a couple questions here. An old person says, Mario, did any of your family in Switzerland see any changes during the Credit Suisse bailout recently?
Not really. I don't think. I don't think they have accounts with Credit Suisse. They have accounts with a small local bank. So I don't think it impacts. I haven't spoken. I think my nephew, though, like a few months ago, he bought some Credit Suisse stock. And I said to him, be careful. It doesn't look very good in the chart, but he's not silly. It's just a small part. He likes to speculate. He's in the insurance business, but
Yeah.
I don't think it's hurting him. But other than that, no, I don't think. But it could be serious, the Credit Suisse thing. I think the Fed is already providing funds.
Right. So I watched the what was it George Gammon and Jeff Snyder little interview yesterday or whatever. They're talking about just all the banks coming to the Fed for help and all the additional funding that they're providing on through backdoor channels and all the things that those mechanisms that they've created to kind of try to provide liquidity for the world. And that's a lot of the activities uncommon, signaling that there's something happening right now, something is imploding. And so, of course, we'll find out, after it crashes.
Well, I recommend people go Google New York Fed primary dealers. And it's not just U.S. Wall Street banks, European, Japanese banks. I think Credit Suisse is a primary dealer to the Fed. So, yeah, that's where your taxpayer dollars, aside from Ukraine, is going as well.
Interesting. Learning something new. Here we got Dwayne Clark says, what will government use to stimulate work out of their tax base without a viable currency? What will government use to stimulate work out of their? I mean, my assumption would be in the whatever after all this thing comes down, they're going to try.
Well, they won't have a tax base if they don't have a viable currency. That's the problem, and the whole thing. All the government programs are going to collapse. Social Security, Medicare, Medicaid, and it will be. I think Greg Manorino has always talked about that a lot of people will die because of that, because a lot of people are dependent on the government programs.
Yeah, and I think after all this stuff unwinds, and once wealth is basically transferred out of the hands of the working class, middle class, you name it, and that's why they've kind of baked it into the cake. The idea of just being able to remove the taxes directly from your wallet or your app or whatever it is, because they know the average Joe wouldn't be able to or be willing to actually pay taxes after they just lost their entire life savings or whatever. So, but it'll be built into the program. I'm assuming that. Here's an underfunded. Klutz says, "What do you think? It's a coincidence that the euro, franc, pound, and dollar are basically all at parity. Basically, at parity.
Yeah, I don't think. I'm not sure, because if you go back historically, those exchange rates are based on gold and silver coins and their weights. But I guess maybe the only one that I would say it could be suspicious is the euro, because the euro was set up as a basket of the old European currencies.
Mm-hmm.
And I think when it came out, it was actually, the euro dropped to like 83 US cents
Mm-hmm.
right off the bat. But yeah, maybe yeah, so it makes it easier. You could be right. Underfunded, I forgot what the whole name
Klutz.
is. Yeah, you could be right. It would be an easier way to reset everything. But I think the thing is just that all fiat currencies are going to zero. So I remember when I lived, you started going to Switzerland, for $1 you could get like almost 4 Swiss francs, and now it's 1 to 1. So it's just a matter of the dollar and other currencies. They're just going down a lot, and the more they go down, the closer they get to one. I would say, as well.
Yeah. Here's a good one here from Janice from Santa Clarita. It says, question, what happens to commodities if the rates fall back to zero? What are you thinking?
I think I don't think rates would fall back to zero, but if they did, commodities would fly.
Mm-hmm. Yeah, I would say the same thing, because I mean, if there was an event like that, that would signal that literally something has broke the fit. They all confidence in central banking and everything like that they've been lost, and everybody and their mama gonna try to run for the exits, and gold and silver off to the moon. And I think that'll definitely break the whole Crimex institutional manipulation.
Dwayne Clark, should stackers be cheering for not the West? I don't think it's a matter of cheering for the West or anyone else. I think we stack to defend the our savings and our efforts that we've put throughout our lives. And unfortunately, the West, or even the Chinese and the Russians, they haven't defended the savings of their population. And stacking is not just a Western thing. It should be. I think people in all corners of the planet should be stacking, because governments, you can't trust them, and not just in the West, but I don't trust the Russian or the Chinese governments not to inflate. So I think stacking is more, yeah, it's more of being your own central bank.
Correct. I agree 100%. Get your weight up. That's been my motto from day one. I'm gonna stick to it. There's no other alternative.
Yeah,
Like,
you're not going to give up gold and silver for Bitcoin like Andy Hoffman a few years ago.
He's gone rogue. He's gone way off the cuff. He's talking dark, talking down of gold and silver. Chris, appreciate you. Says, how do we as citizens push back and not accept CBDCs from the government, since it's still fiat currency disguise? Instead, demand a sound banking system that we have before 1913. Thanks. Instead, demand a sound banking system that we have before 1913. Answer his own question. Yeah, but then once again, like, it's one thing to share our ideas and thoughts on what could and what should, but once again, what the world is facing, I don't think nobody's ever lived through. Like, just looking back at the Great Depression, the little pictures I see of how desperate people were because they lost everything, and having their gold confiscated for those who gave it up, and then on top of that, just sheer desperation led to just people doing unimaginable things. So I wouldn't hope that be the case in our existence now, but you never know. So
yeah, I think I mean, on an individual basis, the best way to try to avoid
Hmm.
CBDC is being self-sufficient, self-reliant, not
Yeah.
dependent on government, so that you don't have to like accept their help, because their help next time there's a huge crisis will
Hmm.
probably be in the form of a CBDC.
Right.
My hope is that, just like the assignats in France in the 1790s, CBDCs will eventually fail because,
Mhm.
like you said, it's just more fiat currency.
Right.
They'll sell it as being like uh, efficient, quicker and cheaper to move funds around. But I would say nowadays things are already quite efficient in terms of financial technology and
Right.
and payments.
Now here's one of the biggest problems I think that will end up presenting itself is that if we're forced into a CBDC system, then all of our daily lives will depend upon transacting, for example, paying your mortgage, paying your car, or if civilization was to go back to some type of normalcy, it'll be required for payment. Like, whatever methods they're going to try to reduce us down to eventually will probably be connected back into that CBDC type of payment method. So it'll be hard not to have it, but then be dependent upon it will be the issue. I think you're talking about not being dependent upon it, because I'm assuming we all would have an account set up for us because we'll have to use it in some capacity to pay bills. At the bare minimum to pay bills,
Or
light
or
bill,
maybe
cell phone bill.
maybe the old system will run parallel with the CBDC,
Right,
and
would be great.
only people who are dependent on the government will be on a programmable wallet, because the
Mhm.
government is going to want to control them because they're giving them things.
Mhm.
Maybe I don't know.
Right. So it's hard to navigate, but yet, it's part of their plan for a reason. So it says, should crypto be looked at as a gateway to a universal basic income and a new economic future? Perhaps a government issued digital token mandated by one world government, accommodated, accommodated by surveillance. I'm not sure if that's a question. It says, should we look at crypto be looked at as a gateway to universal basic income? Crypto.
I,
I would say crypto.
I don't think so, because cryptos are supposed to be decentralized. So how would governments be able to control that and turn it into like a universal basic income?
Right.
What do you think, Mike?
I don't think they want to. I think between now and the time, if the CBDC protocol stuff is rolled out universally speaking, because a lot of the things they're trying to do is to make it interoperable with all the other nations. And at that point, I think we're going to really find out the true nature of what crypto can do, or what it was intended to have us believe it was supposed to do. Because especially, like, we're going to see more of the proof of work issues coming up now that Ethereum's gone to proof of stake. So they're going to definitely try to, create some type of consensus war. And I think it's going to be a major pushback against cryptos in general through regulation of some kind. How, I don't know, but I doubt they allow both of those payment railways
Mm.
to flow freely together. That's competition.
Or
They don't like that.
yeah. Karen Reinerson says, I paid into Social Security for 45 years. It's my money. I agree with you. The only problem is that your money's been spent. and,
Mhm.
and they might pay you your Social Security check, but it will be with dollars that are a lot less, have a lot less purchasing power than they did 45 years ago.
Yeah.
And I know what you mean, because a lot of people say, yeah, people. I think some people say that the Social Security is like a government benefit, but it's not. It's something that you put there, that you were kind of forced to put.
Mhm.
And it's the same thing here in the UK. I mean, I've paid into the national insurance um, since I've been here for 30 years, and
Mhm.
it's supposed to provide me with a pension when I'm 67. But I don't think it will be worth much in terms of purchasing power, because politicians always spend people's monies,
Mhm.
and the only way to they've spent your money already. I'm sorry to say.
Right. So I was ranting on an article, and so this just talks about the U.S. pension plan faces a bigger crisis than the UK. So it just shining light on the whole guilt issue with
Oh
what you
yeah,
guys are experiencing.
yeah,
And then it talks about the current pension system here, and they were trying to sell the readers on the fact that we don't have that same type of contagion event based upon the LDI being an issue, but what we
yeah,
have on our side is a lot worse. And it talked about just the fact that
yeah,
underfunded of pensions already, and the
yeah.
promise of 7% is not there.
Ra- Rafi Farber did a video today,
Uh-huh.
and he looked up into uh, how much U.S. Treasuries
Mhm.
U.S. pensions have, and
Mhm.
they hold about 3.3 trillion in
Mhm.
U.S. Treasuries, U.S. pensions. So
Mm.
you get volatility in that.
Right.
It could the U.S. could have the same problem that the U.K. has, because the U.S. has had uh, here as in the US, they've been promising also 6, 7, eight
Mhm.
percent
Mhm.
returns in a world that until like last year was like you had yields less than 2%.
Yeah. And then real quick on this last little article here, I would encourage people to look this up and read it for yourself, very in depth. It gives a good explanation as to where we're at. But then, just to summarize here at the very bottom, it says, "Meanwhile, we aren't even getting into the number one crisis of the U.S. defined benefit pensions plan, which involves the mother of them all, Social Security." Says this already has a hole in the account's valued at 20 trillion, which would either require higher taxes or lower benefits or both. And so a $20 trillion problem right there in the Social Security
Or
fact is
yeah,
that there.
or more money printing, they forgot.
Right. Or yeah, exactly. So it's going to be issues no matter what. And that's the unfortunate part, where the whole retirement scheme, like the scheme aspect was they were trying to create something on the fly to pacify the events they were experiencing then, not really even considering about how, as a can got kicked down the road, how are they going to deal with it? So everybody who made those promises are no longer in office. Most of them already, unfortunately passed away. So
Yeah.
they weren't concerned with solving that issue. What else we got here? Well, we have 40 minutes. Let's go. We'll take a couple more questions, then we'll get ready to wind it down.
Okay, let's see.
The pension is a cookie jar. Forget Social Security. Yeah. Lynette Zhang, it says usually takes 3 attempts before evaluation of currency accepted. Here's a one here. It says, question, what stops the Fed from devaluing precious metals for another decade?
Well, the supply of real metal, because the
Mhm.
more you manipulate the price of something,
Mhm.
the more shortages you create, and the eventually the higher prices will go. If yeah, and if the Fed could control the price of gold, I mean, we'd still be at $35 an ounce, and we're not. And I think we're seeing already with all the premiums that
Mhm.
physical demand is quite big.
Right. We're literally like it was 35. It's $35 for a silver eagle for sure. At a minimum, like premiums are already what 90% or something like that. So here it was a question a while ago that I'm trying to find it, but the question has something to do with given the premiums on the sovereign coins, silver coins in particular, is it worth it? Is it worth buying an eagle at 36 rather than just getting some junk silver or generic,
Well,
Indian?
but junk silver as well has got huge premiums.
Correct.
I don't think you can buy any kind of silver that's that cheap anymore. The thing is, here in the UK, the dealers are starting to pay a premium for you to sell.
39.
So
Yeah. So somebody said they paid 39. I'm assuming that's for a silver eagle the other day. So
yeah.
yeah. So that right there should be more than enough of a sign that, things
Mm.
are unraveling, people are waking up, and people are trying to rush and get to grabbing something real and tangible. And it will not get better. Like, so no matter what the spot price looks like on the screen,
Oh,
a disconnect is
another
already happening.
interesting question here, Matthew. Thoughts on the fourth turning? Yeah, I've known about the fourth turning for quite a few years. I didn't read the book.
Mhm.
It's by two authors, but one of my old clients from the U.S. used to talk to me about it. And basically, the fourth turning is like a generational cycle of about 80 years, and usually you have a lot of uh, chaos,
Yeah.
political and economic. So the first, let's say the fourth turning, if you go back in U.S. and British history, in the U.S. it was 17 around the time of the revolution, 1776 to 1783, and then you add 80 years to that, and you get to the Civil War, 1860 to 65, and then you add another 80 years, and you get to 1940. And World War II. So you add 80 years from there, and you get 2020. And usually there's always like a leader, like an old person or something. You know, you had Washington, you had Lincoln, Roosevelt. I don't know now. I guess you could say he's a really old leader, and whether he's in control. But I think the fourth turning and the basic gist of the fourth turning is that uh, by the time someone 80 years go by, the new generation forgets what happened to their great grandparents
Yeah.
80 years ago. So things repeat. So I think we're definitely going through a fourth turning.
Yeah, I would agree. I was trying to find some. I see a lot of visual aids out here, just basically talking about cycles in general. Just kind of highlight what you're mentioning. Here is just the idea of cycles itself and unraveling phase. That's kind of where we're at now. Complacency, gluttony. So yeah, interesting times.
All right.
What else we got here? Try building something, then deceit leaders, whatever. All right, so let's we'll wind it down with that with 46 minutes. All right, so what we got? End of the month, almost. Elections 2.5 weeks away. We're going to see more of probably more whispering. We expect more whispering to try to keep the markets calm to get us through till November 8th ish. Then after that, what would be in that time frame where all hell break loose. On top of, as I mentioned beforehand, every nation basically warning their citizens to get out of Ukraine. So a lot of people are expected or anticipating something. So yeah, what that is, who knows? But in the meantime, stay calm, enjoy life, and do the best you can. Level your neighbors, man. Anything we'll leave us with, Mario, before we part ways?
Yeah, I mean, in '08, everything unraveled before the midterms in '09. So I'm not even sure they'll be able to keep things going until November 8th. So don't get too complacent, I would say.
Right. Good point. Well, all right, my good people, enjoy your weekend and just try to unplug and unwind and enjoy. Find something enjoyable and also put some energy and effort towards something you're passionate about, whatever that might be. Be productive in some capacity, and then just give just be grateful. Gratitude is I'm trying to practice the attitude of gratitude because it requires a lot these days. But anyway, be blessed, be safe. See you guys later. Enjoy your weekend. Be back at next week. Peace.